Forex Trading Explained, the way that professionals do it, strategies, and a tutorial to help you start making some money, honey. So let's get into it. Now, this is going to be a bit counterintuitive, and that is actually how Forex trading actually works. So why do I say that making money in Forex trading is counterintuitive? It's because, well, if you think about it, I think we all know that most people lose money in trading, right? Whether it's Forex or anything else. So if you do what comes natural, what feels right, what other people teach, if you can Google it, pretty much it's not going to work because that's what everybody's doing, and the masses lose money. So if you do what the masses do, you're going to get what the masses get, which is losses. So we're going to show you a counterintuitive approach today, and well, frankly, this is actually what works in today's market. So what a lot of people teach you is that something like a trend is higher highs, higher low, higher high, and that's what you should trade. All right, but the problem, and then what we got here then is we have a higher low. So, I mean, at this point, you don't really know what you've got yet because you don't have a higher high until here. So if you're going to use that kind of strategy, this would be your first higher low after a first higher high. And you'd get in here and whoops, no so bueno, and you get stopped out here. And then you think, hey, I thought that I'm supposed to buy into these uptrends to find buy higher highs, higher lows. And yeah, you are supposed to if you want to buy your favorite brokerage firm more Learjets. If you want to contribute to your favorite broker's Learjet fund, then that's exactly what you should do. That is 100% correct. I've got nothing against my broker or against any brokers, but you know, I've got a family to provide for, and I got kids, and so as far as I'm concerned, they can buy their own Learjets. All right, so here's another example. So again, we've got price coming up here, and then we've got a higher low. Now, even here, we do make a higher high. All right, that's what I want to show on this example. So this one's a little different. Sure, we do get, I mean, if you want to look at the pips here, yes, we make a higher high, but is that really going to make you much money buying this? And then it comes around and turns and stops you out. So no, not much money there, right? We want a good risk-reward ratio. We want a good win-loss ratio. We want both. We want it all. And it comes crashing down. So now, wait a minute. What if we reverse engineered that? Have you ever thought, God dang it, if I just did the opposite of all my trades, I'd probably be a billionaire. You know, a lot of people feel that way. I remember I used to feel that way. I really did. I had that thought back in the early days of my trading career. And I've trained over 20,000 students in the last 20 years, and I have found too that this is a common thing that they think also. So now think about that. If your subconscious mind is saying that, which it is, what it's doing is it's telling you information. It's saying, hey, listen, Ms. Trader, Mr. Trader, I'm picking up on a pattern here that everything you're doing is losing money. So what if we just did the opposite? Trading is opposite world to what you have been taught. So the higher high, higher low thing, it's not that it's totally wrong, and this is where professional trading comes in, is that there are a lot of things that are half-truths. We like to think in terms of black and white. I totally understand that. We want things to be concrete, but what I want to share with you today is the dollars are in the details. And the most important personal characteristic of a trader is patience. When it comes to human characteristics and your own personal growth, your own mental and emotional qualities as a trader, patience is the number one. So here's what I do. All right, let's back this puppy up. Let's see if we can back this puppy up. There we go. Okay, so I trade what's counterintuitive. So I'll watch and I'll watch. And by the way, this doesn't happen all the time, but that's the beauty of it. So this is where patience come in. So you say, all right, we've got this level here, and now we've got this level coming in over here. Actually, in order to move the chart forward, I need to take off the drawings. They don't let me keep the drawing on and do that at the same time. So what do we got now? Okay. So what I'm seeing here and what I'm looking for is what's counterintuitive. Instead of buying the higher low, I'm going to look for a higher high and short it, but not quite that simple. not quite that simple. There's a little nuance here. Again, dollars are in the details. That's an ancient Chinese saying that I, well, just made up. And what we want to see here is we want to see a higher high that just has a wick. So we call that a rejection of value pattern. It means that, yeah, technically you've got a higher high by looking at just the high here and the high there. But highs and lows are not what's significant. What's significant is where the market opens and where it closes and where the actual value is. And so when you get wicks like this, but you get opens and closes down here, let's draw it across. I'll use the yellow here. Maybe, hopefully you can see that. Yeah, you can see that. So that means, okay, yeah, we got above this high, but then where the market closed was down here, below that high. Where the market opened on this bar was below that high. The only thing we had above this high was wicks. And therefore, what that means is some trades occurred there, some buys and sells exchanged, but the market did not find value there. It rejected the value of this high. And therefore, it is not a bullish pattern. Higher high is not necessarily a bullish pattern. That is too little information to establish what the value of the market is here. And actually, it's the opposite. So opposite world comes into play, counterintuitive. But really, again, when you understand the logic of it, that's what I'm trying to share with you here, is the logic of this pattern actually does make sense. There is a logic here. It's just that, well, perhaps some people haven't explained it to you in depth, and that's a shame. So what you want to do here is go short. What really matters is just following the money. In fact, really, all of trading comes back down to that. Follow the money, honey. The old slogan applies to a lot of things in life, politics, business, right? And definitely, more than anything, trading. Where is the money flowing? Nothing matters. I don't care why it happened, what the news was, what the fundamentals were. At this point in time, as a short-term trader, investing is a different scenario, by the way. But in day trading and swing trading, what I care about is where's the money flow right now at this snapshot in time? Because I'm going to be in and out in a matter of a few hours, days, whatever. All right. And so that's telling me that, oh no, there is supply demand. Okay. There is not demand above this price. And therefore, what do I want to do? I want to go with the flow of the money flow. And boom, holy mackerel, Mandy, down she goes. So to summarize, we will indeed want to buy, or I'm sorry, we want to short higher highs, counterintuitive, but dollars are in the details. So we only do it when there's a rejection of value pattern as defined by wicks and not by real bodies. All right, so there you go. Now, if you want to improve on this, obviously, I do encourage you to add more things to this. This is one piece of evidence. We're just looking at price patterns here. You want to time it correctly. So this is where my timing indicator comes in, my market entry indicator. You can get that at indicatorwebinar.com. I show you how to apply it to your chart. Works great with Forex, stocks, futures, cryptos, and timing is so critical. So, I show you how to do that, and I give you a whole tutorial on how to do it, because the key is, well, how do we know that this is going to be the final high? And that's what this indicator does. Tells you when is the cycle high, when is that cycle low, when is that cycle high, the timing to know, oh, okay, that's when I get in. So also subscribe to the channel, and that way you'll get notified of future lessons, because, we're Top Dog Trading. And with Top Dog Trading, I can neither confirm nor deny this, but they tell me that when you subscribe to the Top Dog Trading YouTube channel, you save a puppy. Okay, again, I can't say that that's absolutely sure, but someone once told me that if you don't subscribe to Top Dog Trading videos, then you hate puppies. So, again, can neither confirm nor deny that, but that's the rumor. That's the rumor. But on the positive side, you'll get notified for future videos, whether you like puppies or not.